Okay, so here's a question. Here's a debate, and we're already off on some weird tangent of it sounds like the Trump releasing the Mueller files. The interpretation of reality is all over the place. This guy, Doug, says, how do you know when to buy low and sell high? I'm sorry. How do you know when to buy low and sell high? Yeah, that's right. And when to trade the vacuum fill. Okay, so when to buy low and sell high would be when it's low, buy it. Okay? When it's high, sell it. That's when you do it. Now, this guy claims he was trading the 4-hour chart in the guppy. He says, like last night on the guppy, I kept buying on the 4-hour chart and being stopped out. But today, when I look back on my losses, you can see a huge vacuum was filled. How do you use all these methods successfully? Well, you're leaving out a few things. If you buy a vacuum, if you buy a zone, if you buy an area below you, and you can figure out where the stops are being hunted, let's call it the stop hunt. That doesn't have a when to it for you. It has when do you place the limits, maybe, but we can all see the area of interest, okay? Now, I get the feeling that when he said, okay, the when to buy at the market is after it's down 4 hours. I've said repeatedly, if it's really down big in 4 hours, you're going to buy with a wider stop, which means you're buying bigger. You're risking more. Is there any other thing we can do here? Is it this complicated? Is trading this complicated? If you're running a 20 pip stop, you got stopped out. Now, my question is, why in the fuck would you run a 20 pip stop in the guppy unless you were asking to get stopped out? How big is this ticket? Did you buy a 1K with a 100 pip stop and risk $10? I don't get it. The only other option for you was to be short into the vacuum from a volatility breakout strategy. There's only 2 trades on the planet. Breakout or reversal. Trend or reversal. Breakout is trend trading. Unless you're buying the reversal in an uptrend, and actually 80% of the market's ranging, and it may be ranging on an angle, and you may call that a trend. Where are you talking about? Okay, if you bought 40 standard lots, every ticket went down into the vacuum. Unless you have $2 million in the account, yeah, you might be taking a loss. But maybe a week from now, that's up 1,000 pips. So, how do you use these methods successfully? How do you use any method successfully? And you're speaking so vaguely, I can't even... There's only 4 hours that you could have bought. Take a look at the chart. Okay, go to the source. Here it is. He's talking... Okay. If you can't see this low, right? If you can't see this low, this 8-hour low, if you can't see this low, of course you can't see it until it happens. Okay? If you can't see that, the hole that's filling is the one that I'm just going to paint it because I can't really draw these stupid fucking trend lines. Here, okay? If you can't see this forming, this pressure, you probably shouldn't be trading vacuums or even, I don't even know what. If you can't see the breakout traders trade, small range, sell stop, buy stop. Okay, the ratio here is pretty good. You risk this much to make, well, whenever you decide to get out of the trade, your first dip into the vacuum, you could have cashed out and made, well, maybe 1-to-1 ratio. If you held through this whole stampede, and you added on this candle, It made a little bit more. Maybe you got stopped out. Maybe you put a buy stop, sell stop. But then if you add it on this candle into the vacuum, your cashing out is a buy. It's just like the buy limit strategy. The one element missing from this commentary is, what fucking size are you guys trading? What do you consider a loss? It's so funny that people talk about trading without size. And this is the crux of it. I'm wrong about the trade, but are you wrong by $1 million or $1? Are you wrong by $10? My God, man. You're speaking, it's like politics without the lemonade stand concrete example. To just speak like this is ridiculous. Oh, gee, the guppy's retracing. What a surprise, You had to buy into this. If you were going to buy low and sell high, you didn't have a choice. If you're not aware of this vacuum being filled back here, and here comes the scalpers or the dead cat bouncers in the structure, you just can't trade one technique either. Let me go on to this commentary. It's just mind-boggling that people can't figure out there's no other choice in trade. And where's your chart? I mean, this guy, Mad Forex, doesn't have any dialogue on any. I can't watch his shit. There's no dialogue. What are you trying to tell me? Showing trades? Oh, I made 350. So what? It's completely out of. I can do that. Oh, I made $8,000 on one fucking position. Great. But oh boy. So I mean, he kept getting stopped out. And I kept buying on the 4 hour and being stopped out. Well, dude, 100 pips stop, you'd still be in this trade, right? If you bought every 4 hour bar that was down, this one was down, you bought this one, and then you bought a little bit here, maybe not that much. It's not down that much, but then the next one you really bought. And hopefully you had limits coming in here. Like, this is your biggest limit ever. Ever. Dude, you're only down 60 pips. And if you say you kept getting stopped out, it means that you had a 20 pip stop. So you bought here, they stopped you out. I don't know how you bought here and they stopped you out with a 20 pip stop. I don't even know what you're saying. What you're really saying is I bought like so much here and then they stopped me out. And don't forget, you have to consider you must be swing trading on some level. Right? If you bought here and you were able to get that price, you're up on that trade. So all the vacuums are here on this ladder, on the stairway going down. You see how that works? There's an 8 hour basement here. Okay. That's what we're going after. We're hunting the stops. Imagine you're hunting stops. Think opposite 90% of the people that are trading. Not to say that the breakout trader here did not clean up, and the one here. He still has to get out of this, or by next Tuesday, we could be over here trading. And what, you didn't take any profits along the way here? Would you keep adding here? Maybe you did. Are we going to keep going down? Who knows? I've already made my money on taking 20 pip bounces. I'm holding the position. It's not a lot of money to me. It's a lot of money to you. Nobody talks about this. Is that a lot of money to you, $20 or $200? It's mind-boggling. Besides, don't trade the guppy. The spread sucks, and it's just a fucking mess. Just load up on the high probability stuff like this. Here is the euro dollar. It's down hard. You buy. It's obviously in the vacuum. It's a clean market. It's $2 trillion a day. Just buy that. Just step away from it. I'm sick of hearing about these fucking wackadoodle pairs. What about the pound CAD? Dude, You're grasping at straws. You can't accept the risk of trading. Just don't. Okay? You can't see this giant hole here. At the market, there's 3 trades at the market here, right? You buy real bigly here, big, 3 clean down moves. Buy. That's 3K. The question is, how many limits did you put in here? How many limits did you put in here? Did you get stopped out of this? This is a 100 pip grid. You got to have a number with this, man. How big are you trading this shit? Mind-boggling. And, but that's it. That's why people are just, this is a 100 pip grid here. 100 to the 50 to the 100 to the 50. Can you withstand gobbling up a 100 pip window? Just like here. Okay? This is down so hard, you buy at the market. You do not buy at the market as it goes up. Unless you are saying, well, I can see we're about to break out this small range. I'm going to get at the market. And before that, could you have sold into that on a breakout strategy? Yeah, that's the only other alternative. Is this, what's the other reason for getting into this short? Because you're either short from this extreme high off of this rooftop. Okay, the rooftop's here, man. It's here. Can you see it? At some point, you're going to see this. Or you're not. If you had a sell limit here and didn't fill, it's because they filled this chunk, see? This chunk going back to this daily top. You've also got to have the balls, or the endurance to hold through a swing. When we come back to the round number here and tag this after down hard for 1 day. I'm sorry, this day. 3 days down. You don't have a choice. If you want to make a lot of money, you don't have a choice. If you have sell limits up here, well, what if it keeps going up? Oh my God, okay. Don't trade. Don't trade like I'm trading. Don't trade like this. I just don't get it. I can't wait to see these guys' video. So the Mad Forex guy comments, which his videos are just kind of worthless because he didn't say a fucking thing. We don't know what he's talking about. You just have to have some connection to reality, concretes. It would help. Okay, so here it is. How tight was your stop? Crickets. Crickets. I didn't say how big are you trading even. I haven't gotten there. I didn't say he's really pulled. Okay, simpleton stops were tighter than a hooker's ass, and some weren't. You still haven't given me a number. Okay. Then here comes the Mad Forex guy. Trader. Doug, in my humble opinion, I hate when people say that. Just in your opinion. It's extremely hard to trade this way. On paper, I guess if you had a huge risk to reward ratio on each ticket, huge? Okay. Risk to reward ratios don't mean shit unless we're talking about what size you're trading. I don't get it. Are you going to risk $6 to make $4? Better than the casino. 6 to make 120 pips. This also presupposes you can hold through the whole fucking swing. On each ticket, there may be a chance to profit. Okay. Huge risk to reward ratio on each ticket. There may be a chance to profit. Oh, so if I risk 100 pips to make 5. Okay. Otherwise, you will be open to losing more of your limits compared, on average, to your winners. Huh? You lose to your winners? How are you even placing these orders? And what's the alternative? I can't wait to hear the alternative. If that's true, I love when people say this. Okay, then we'll do the opposite. We'll make a bunch of money. Don't trade on limits. What should I do? Buy at the market? I didn't even. He's talking about limits, and we don't even know what the other guy's talking about. Whether he's talking at the market or limits, right? He doesn't say limits. He says I kept buying the 4-hour chart and stopped out. I look back at my losses. It was a huge vacuum. How do I use all these methods? And I don't even know what he means by methods. So, otherwise, you'll be open to losing more of your limits compared on average to your winners. A totally winning limit drop is rare compared to a totally losing one. Every trade's a losing trade. For that matter, same with market orders. They're a complete loser until you overcome the spread. Okay? Then the Mad Forex guys, the Doug guy says, hey, Mad Forex trader, how do you use any of Simpleton's methods to trade successfully? How do you trade? No shit. How do you trade? So we go to the Mad Forex guy for some insight. He's got this ridiculous thing that he does. He plays music, and I'm going to speed this up because it's so silly. I don't get his point. He doesn't say anything. We don't know what's going on here. There's no mention of money here. We're talking percentages of what? Pips. I don't even know what this is. 1 minute ago, 19 seconds ago, the Z-score. I don't know what this shit is. Look at this. Limits. I hate when people type on the screen. Limits versus scalping. How? Now, what is scalping? Is scalping trading at the market? I'm assuming, right? It should be markets versus markets versus limits. The gain is 5. Where did you put your order? I just, this is weird. This is weird stuff. Why? I mean, thank God the guy did a video, but it just goes to show you that just because you make a video, how is this helping? I'm still lost. I don't know what the X's and O's mean either. Is this the length of the trade? I don't know. No explanation. Scalping. Scalping what? These many pips? And what size are you in, man? Look at all the pips he made scalping. These are the limits. Where did you put your limit orders? 1 pip deep? 100 pips deep? How many fills did you get? Where's even the ticket count on here? This is ridiculous. I don't get it. It's just because there's no argument here. What is the argument? I trade at the market and I make more money trading at the market? Okay, let's show you how I did it and why did the limits work out. Or maybe these are stop entries. He said there's a limit. I don't get it. Underlining it doesn't help. 27% a month here. Can I see the chart, please? Your Honor, can I see the chart? Oh, he's checking that off. I thought he was Xing off the top row. What is this? We circle. Maybe the guy speaks a foreign language, so he can't speak. I don't know. I don't know. Z-score is worse or better? Dollars. Oh, smiley dollars. So he does these weird things where I made 200. So what? You also never see on his channel any description of any kind of like look at these videos. He'll just play music and I don't know these limits. Let's see where he's in on these limits. We don't even get to see the chart. Okay, I don't get it. It's just completely, it's not an argument. It doesn't say anything. Do you even see the size listed here? I don't. Do you see the size of each ticket? It's just, it's weird, man. Why does this guy even do this? I don't get it. My bad demo sunk the boat. Okay. Here's a channel trade. Now here I think some of these he has a chart. Still, we don't know. There's no commentary. It's just music. We don't know why he's getting in these trades. He's selling divergence. I don't see a stop. 15-minute chart. I have to assume here. And is the exit strategy? I don't know. $50 in 15 minutes. So I don't get it. Is he even out of this trade yet? Okay, right here it gets out the end thing. Okay, so he's trading at the market, obviously. I don't know. Because it says, okay, scalping apparently for him. I don't see the beginning of how he got into this trade. He just pulled the trigger at the market, I guess, right? Okay, so scalping for him. How did he even do that? He hit the sell key. Anyways, let's listen to the guru of thinking about these things.
On trading psychology, both trading in the zone and the disciplined trader. You've heard me talk about them many times.
So that is the Mark Douglas. Here I've got to adjust the volume here. This is Mark Douglas being interviewed before he died. And he's on Wise Trade, which is a... they invited him on. He spoke really very succinctly because he was being interviewed as opposed to talking about himself, where he goes in more depth.
Here on WTV, and he is here today to help you become successful traders. Mark, good morning. How's it going?
Good morning, Jared. Glad to be here, and I hope I can be of assistance to some of your traders who are viewing right now.
Mark.
Yeah, so the Wise Trade people, I don't know if I think they might be stock traders.
You know, last time we were together was at Wise Fest, and had a lot of fun. I'm really excited you're here with me today.
Thanks.
So let's.
So a lot of my, to me, the scripts cure this whole problem of buy low, sell high, which is the only way to make money, by the way, and sell high and buy low. And how do you get in these markets, and how do you do these trades? Okay, I just don't know what people say when they say, well, you know, or this guy say, well, limits, there's no size mentions or nothing. So the trade that I did earlier was kind of like the other trade, just buying plunges or rallies. When will it stop? What does it all mean? When will it all end? This is the daily Australian dollar. Now, I had chances here to cash out, which I didn't take advantage of. This is the trade that I did in this demo account talking about how to trade new lows. Here we have this big down. You would buy at the market on the 4-hour chart. It goes up. You cash out. Trade over. Okay. Now, if you bought at the end of the 4-hour period, you'd be getting in here and you'd be getting in here, right? You're getting in here and you're getting in here. You're not going to buy this because it's up. You're going to sell this when it goes up. You're going to cash out into the floor. Trade's over. You don't have to sit through all this bullshit. This may eventually flip into this hole because this is becoming a big hole. It may flip into this hole. Just like it flipped into this hole before it flipped down into this hole. Okay, how is this? The problem you're having is you don't want to take it. You don't want to. You're looking for the Holy Grail. I cannot help you. There's no fucking way. You just got to also show me what the fuck you talking about. Like, put up a clip or a video. I don't even know if you have any content on your channel. I haven't really looked. I did look at the Mad Forex guy because he's one of the few people that has a video. Although he doesn't say anything, so I was very disappointed the first time. I was like, okay, well, what are you trying to say here? And can you explain it? You know, I get it. You know, 3-minute video, that's your limit of explanation. Let's take a look at the guppy that he was talking about. All these pound things are taking down. I just did a long video about it earlier, but I haven't posted it. It's 2 hours. I fell asleep before I could post it. It's just very long, rambling nonsense, incomplete sentences. I don't know if I'll publish it because I'm kind of going over this a little more succinctly because somebody's commented upon it, and so therefore, I don't know. It's just, I don't get it, because if there's another way to trade that makes money than trading at the market, what you're really doing at the end of the move, and that's not on limits. And I didn't say, saying buying the vacuum, that area, if you're not long enough on limits, if you didn't get all the limits filled that you wanted, because maybe you had a limit down here, a price that you wanted to buy, and they didn't ever get to the price that you wanted. Let's just say they're prices that you want to buy. So Mark's going to answer this question.
Let's get started. First of all, one of the main issues that I see all the time is that people don't use their method to its full potential.
No shit. So they freak out. They go, this ain't working. Okay, next problem. Right? Their technique. Their tactic.
In other words, there's a negative correlation between what the trader ends up with and what he could have had if he just followed his methodology. In your DVD,
very hard to follow stuff in the storm. Did you ever drive somewhere and you never been there before and you think, God, did I pass it? Typically, you haven't passed it yet. Do I keep going? These are 9 questions. Oh God, I've never been here before. Should I stop and ask for directions for confirmation? If you start getting scared, it's because you're probably not there yet. All the new data is kind of overloading you. You think, oh boy, this is really quite a cruise. I had no idea.
Program, you refer to this as the profit gap. This is a problem. You refer to it as the profit gap. And I think it's one of the least understood concepts of trading. Can you address this a little bit, this profit gap?
Yeah, that's actually a really good place to start because I think that more than anything, what your viewers want or what your customers want are consistent results. They want to be able to produce an income that that they can rely on from their trading. And I'm sure that many of your viewers have already realized that getting a steady income is not such an easy task.
Yeah, and everyone seems to get trapped.
So the steady income is you're going to replicate the day job that you could easily have steady income at. People want to step into like the real estate market where I remember I took a real estate class with my starter wife, and the girl that was running it, the lady, a little bit too much makeup for me, but she said that, you have to live off of credit cards till you sell a house. Yeah, these people, they go, these real estate people, they might sell a big house and then, wow, a couple small houses, and they they gotta have some type of buffer. They're just like traders, real estate people. They get it. There's no consistent income there unless you're working for the firm and you're getting paid a salary to sell you're on staff. But if you're an independent realtor, you might as well just be a Forex trader. What's the difference?
I'm thinking that because trading is easy, or because it's easy to
It's easy to pull the trigger, I'll tell you that. It's easy to throw in a pile of limits without any fucking concern of are these precise areas, or if you can even afford them, even if you canvas a zone, can you afford it? We can all look at this chart and say that if we would have sold anything in this 50 pip window and bought anything in this 50 pip window and rode it edge to edge, we can see how much money we would make. But maybe the fact that it's going down, you're like, I can't believe I'm buying this. I bought here, I bought at the end of 4 hours, and I bought just so much more because it went down so much more, so I had to buy so much more. And, you're like, wow, can't believe I'm buying this, can't believe I'm buying it. Well, okay, well, don't buy this move, okay? Because this is... Hopefully you're cashing out into here for your first target. Need you understand structure. I'm not sure that it's, you know what? Maybe you'll never understand it. That's okay too. Go get consistent income somewhere else.
find yourself in a winning trade, which many people do.
Right.
You know, that they think it's also easy to become a consistent winner.
Right.
And you know, it took a long time before it actually dawned on me that winning and being a consistent winner are two completely different animals, two different things.
Right. So to build an account, you have to be consistently winning on something over and over again. You may go through a streak of losing, but as long as you're doing things that are logical, okay, just because you're losing doesn't mean you're not trading correctly, because you're doing what you need to do. There isn't really, you cannot, the idea that all this analysis is going to guarantee a win is just hysterical.
And in some ways, there isn't even a relationship between the two. It almost seems like there's no relationship between the two.
Yeah.
That's what you're saying, right?
Yeah.
Yeah, that's a real hard mental barrier to break through. Mainly because, you know, it's so easy to find yourself in a winning trade in that.
Yes, you could just pull the trigger really willy-nilly and be like, oh, God, I can't believe I'm up in this trade. Yeah, that could easily happen. We've all had that where we put in the wrong ticket and we're up on the trade, and I'm like, oh my God, I didn't even want to be short, and I'm making money. Shit. Now what do I do? That's even worse.
Because winning actually requires no skill at all.
Zero. I mean, you just pull the trigger, or you have a limit that got filled, and all of a sudden you look and you're like, holy shit, I'm up on this trade. Or a stop entry. Look, it broke out just like I thought it would, and look, I'm up. But now, are you going to protect that win? Are you going to cash out? Like that last video in the Forex guy, he made $50 in 15 minutes. He saw the top. He gets out of that trade. Boom, he's out. Okay. But how many of those trades are you going to do per day, per month, per year, per 10 years?
In other words, unless you consider that, you know, the being able to click a mouse button or, you know, tap a pad is a skill.
Well, it is for some people. How do you think I got on the internet? But that almost seems like the execution skill does not seem that difficult. Program a keyboard, hold down the Alt key, and hit your favorite other letter on the keyboard out of the alphabet and the numbers. You have the alphabet and the numbers available. 1 through 10, 1 through 0. There's no 10. There's no Alt 10 or a Control 10 key. You use the 0, so you have 10 plus 26. You have 36 alts and 36 controls. You have 72 hotkeys in there. You could program in MT4. Or you could have a double click that launches an array with limits and buys one at the market. It's a bottomless pit of entry.
And we don't have to have a reason or good reason or even actually any reason to put your cursor on the buy or sell button and then immediately find ourselves in a winning trade. And
so that's tough.
It could be a monster of a winning trade. And what did it take? What kind of what kind of skills did it take to actually experience this? Absolutely none.
Yeah. So it'd be natural to take the leap from, well, if it's this easy to win, it can't be that much harder to make a steady income. Like you said, it's that easy to click the mouse and for me to sit there and make $5,000 or $10,000, then it must be pretty darn easy for me to sit there and make a living out of this. You know, and that's what I thought for a long time, but that is not the case.
No, and that's exactly how I started out too. And I know, not unlike a lot of other people who...
I think everybody sees they're up in a trade and goes, holy shit, I like this.
Who are willing to, let's say, give up a real high-paying career to be a trader because they thought it couldn't be that hard.
So what makes consistency so challenging? What's the big hurdle there?
Well, we're going to get into that, but at the most general level, I'm going to say that it requires learning the type of skills that people just simply aren't used to learning.
Boy, you could never have made a more profound statement. And the questions that people ask, it just shows, right? You can read between the lines of people's questions. They're like, how do I do this? Oh my God. You have to go against everything you've been taught. But I see the stuff people have been taught, you know. They're trying to fit in the markets, you know. I need confirmation, I need moving averages, I need a system, blah, blah, blah.
Mental skills.
Mental skills, yeah, exactly. In other words, it requires mental skills. Most
balls. I think it requires balls.
people assume that because their technical method gives them a signal to get into a trade, that if the method produces a high percentage of winners, it will equate to a consistent income.
And that is, you can't blame people for thinking that, because it makes total sense that, gosh, if I just had a better Gartley machine.
Not taking into consideration that the proper execution of those signals requires mental skills.
Yeah, I mean, because you would have to take that entry without knowing the outcome. You have to keep taking that same stochastic signal or RSI signal or Gartley signal. You just got to be consistently staying on that same method. If you keep system hopping, you're going to get whipsawed.
Give us an example of this.
Well, take for an example, a high school basketball player who, he'll go in the gym and practice throwing his free throws, maybe for even 2 or 3 hours a day. It wouldn't be unusual for him to be able to hit 50 in a row, would it? I mean, that's
You
not
see that all the
out of the
time.
realm of reality, right? Okay, so the problem is that could he even hit 2 in a row if the circumstances were he was in the final game of the NCAA championship, his team is down 1 point, there's only a few seconds left on the clock, and he was just fouled.
Changes everything.
Yeah, under those circumstances, without the appropriate mental skills, hitting either one of those free throws is very unlikely. And regardless of how well someone could do it in practice, most people would choke.
So really the skills you're referring.
So as you increase the size of your ticket and the pressure's on and the market's about to close and you are like, oh boy, or it just keeps going against you and against you. You're like, oh boy, my God. You could totally go against what you said you were going to do because the pressure was too high.
Referring to what you're talking about, Mark, is actually staying focused on the process, staying positively focused on the process itself, in this case of throwing the ball, in our case obviously of trading or following your method,
right,
and not being worried about blowing it, about the consequences of what could happen if this trade goes wrong.
Now, nobody thinks about that when they get in their car in the morning and drive somewhere. Say you go to pick up your kid at school. Do you think about, well, we could get in a car crash and both end up in the hospital? Maybe in the back of your mind, it is a possibility.
Exactly right. Just like what I'm going through right now.
Here
trying
on
to stay
TV.
focused. Yeah, trying to stay focused on the process of this presentation and not blowing it.
But you're doing fantastic, by the way.
Anyway, with training, we may have a technical method telling us what to do and giving us the potential to generate consistent results. But like the basketball player, without developing the appropriate mental skills, it's unlikely we'll be able to do what our method, our trading plan is indicating without making a number of potential execution errors. In other words, to stay positively focused on the process of trading by doing exactly what we need to do, when we need to do it, without hesitation, reservation, or fear.
Okay. That's interesting.
So you see, no matter how good a technical method is at generating winning trades, turning those winners into a consistent income requires the ability to do or not do some things that the method itself can't help us with.
And the not do factor is, don't pull the trigger until the end of the 4-hour period. Right? Don't place orders so close to the market that you ignore the momentum, the velocity of the last move, that there could be follow through.
For example, our method can't force us to predefine the risk of getting into a trade. Or if we do predefine the risk, our method can't force us to take the loss that ends up turning into a bigger loss.
Right.
And that's happened to everybody. Okay? Our method can't prevent us from moving a stop closer to our entry point where we get stopped out and the market trades back in our favor. Our method can't prevent us from hesitating and getting in too late. Or our method can't stop us from jumping the gun and getting in too soon, where the signal to actually get in never really develops. And our method can't stop us from getting out of a winning trade too soon and leave money on the table. Nor can it prevent us from letting a winning trade turn into a losing trade without having taken any profit.
I know that all of our traders have experienced these issues. I know they have, and I think really what you're saying is that the method...
The only thing that could do that would be a robot that's going to manage your money.
And this methodology, folks, what we're talking about, we say the word methodology is the wise trade software, that's our method. And it can give us winning trades. We've seen, I know all of you have had winning trades, but it cannot give us consistent results if we're susceptible to making the kind of mental errors that you're talking about here. Okay?
Exactly right. Yeah, that's exactly what I'm saying. And all the mental errors I just listed are the result of thinking, a result of thinking, believing, or assuming that our technical method is telling us what's going to happen next on a trade-by-trade basis, and not understanding that technical methods aren't designed to do that.
And people do want to have a string of winning trades. So on a trade-by-trade basis, people want to be winning every trade. They're like, oh my God, here comes the guppy going back up. Gee, why would it do that after it went down?
Technical methods and patterns are designed to put the odds of success in our favor over a series of trades. It may not seem like it on the surface, but there's some profound psychological implications here. What this means is the outcome of the signals generated by any technical method on a trade-by-trade basis are unique and random. In other words, there's no way to know in advance what the outcome to any particular signal will be.
People don't want to hear this, that it's random.
Or what the sequence of wins or losses will be over a series of trades.
It's a mouthful.
I was very upset by that. So I'm in the Mark Douglas seminar, and he's got 20 trades. You got to take 20 trades. So when I went home, I was like, wow, this is commodities, you know. I got to take 20 trades to find out how I'm doing. I can't just take 3 trades that lose and go, yeah, this ain't going to work. And that's an expensive 2 or 20 trades.
And I understand what you're saying. And I think, you know, we need to, first of all, know that many of our viewers out there are experiencing the same sort of thing, okay? And they're probably going to have some trouble grasping this concept that by accepting the randomness of these outcomes, they can produce consistent results. That's an odd concept.
Yeah, but that's exactly what I'm saying, Jared. I know it's somewhat of a paradox to think that events that have a random outcome can produce a consistent result, but think about it. That's
even more disturbing than you don't have to know where the market's going to make money. You know, people that want to trade these markets, which are so crazy as far as they move hard, then they move slow. I don't know. You know, just don't trade, okay? That's my suggestion. If it bothers you to win and lose money, don't trade.
This is the principle that's been used by casinos for hundreds of years.
Right.
Technical methods and patterns will give the individual trader the same kind of advantage the casino has over the individual player, if the trader can think about it from the proper perspective. On the other hand, if a trader who has generated his signal from a technical method hasn't learned to integrate this principle, this randomness principle, into his trading regimen, he'll undoubtedly find that trading can be one of the most frustrating, if not exasperating, endeavors he's ever chosen to undertake.
Boy, that's for sure.
You know, and I know there are a lot of viewers out there who may be experiencing frustration. In fact, I know there are definitely viewers who are experiencing frustration, but I'm not sure if they're making the connection that the reason because, you know, they don't believe in this randomness principle where you can generate consistent returns by looking at the outcomes of their trades as random and unique.
Right.
They have to be able to view that as random and unique. You know, that's I think the big issue.
No, I know, and that's why we're here explaining it right now. You see, the frustration comes from our expectations. It's from expecting something from our technical method it just can't do. Technical methods define and identify patterns in collective human behavior. Right. Now,
and to me, the collective human behavior is that when we run out of sellers, the auction's over, we're going back up. And if you are trading on the 4-hour chart and you want to know where the big boys are going to stop hunt you, you're going to have to look at your daily charts for that. So your buy limits may start here, right? And you're currently underwater. And you're going to exit at the top of that box on something to pad your account.
Now, the patterns definitely exist. They repeat themselves over and over again.
They definitely exist. There's no fucking doubt. We've proven that. They exist. What's your tactics for doing this? Your method, your strategy, your way of doing it?
The problem is the outcomes don't always correspond with the patterns on a trade-by-trade basis. So what?
And don't forget, it's trade by trade basis. Every moment's unique. It goes on and on. It's pure. You're trading pure random chaos.
What I'm saying is that yes, we have patterns. Yes, and they repeat themselves over and over, and our minds just naturally think, well, I have a pattern that's consistent. I should have an outcome that's consistent with the pattern, right. And that's not what I'm saying at all. What I'm saying is that there doesn't have to be a relationship between the outcome and the pattern.
Right. So, and if the last trade was a winner,
right.
This trade, even if the charts are the same,
right.
Even if we've got the same exact signal, the same looking chart, there's no guarantee that this trade is going to be the exact same as the past one.
Exactly. In other words, this trade...
I hope people do realize that. Just because you buy every sell-off into the void or every rally into the void, you still have to be aware of the extent. Look at the daily chart here. You've really got to focus on this top at the 100-yard line. I have a 20-pip grid on the right. How tight a stop do I need to run here to buy at the 100-yard line? Well, if I put a 100-pip stop in down here, I'm still in the trade. And maybe I bought in limits here. Maybe I bought at the market after one day down. And actually this day was up, so here's a limit fill. And maybe you put some buy stops in here. And maybe on the 4-hour chart there was a breakout here. This looks like unfair value. Auction trading, auction theory explains all these movements. You need to go look at the auction videos then. Auctions with a crayon, auction basics. It's just, I just don't see how it doesn't make, how you people aren't understanding how to do this, okay? And you're still not talking about the size. You say you have a tighter than a whore's ass stops on your buying into a... Okay, well, that's why you're getting stopped out. You're in the guppy. You're trading... You're putting scalp stops in on the... Or low risk? Low risk pip-wise? You didn't even talk about the size you're trading. I just don't get it. If you're going to say that, how do you make money with my method, or with any method, it's not the method, it's the execution, the sizing, the placement. Are they limit stops, market orders? Do you want to buy, your analysis is so good you're going to get 3 standard lots, never underwater. In fact, there's no spread for some reason. What are you thinking, man?
The trade I'm in right now could turn out to be a winner, and does that mean that the next trade's going to be a winner? Absolutely not. This trade I'm in right now could end up being a loser, and does that mean that the next trade is going to be a loser? No, absolutely not.
Yeah. This is interesting.
It just feels like
I'm trying to, for us up here, the goal, the main goal is obviously to take these concepts and reduce them down to the most simple of terms. So, let's again back up here for a second. There are traders out there using WiseTrade every single day. They're getting the same exact patterns, okay? But what you're saying is even though the specific criteria is being used to identify the pattern, okay, for each signal, same criteria, same formula, same everything.
Right. The chart pattern can look exactly the same. Everything.
Right. The outcomes to each signal have no relationship to one another.
That's right. That's exactly what I'm saying. That there's a random distribution between wins and losses over any sequence of trades that you might look at. And so, and again, this is a very difficult concept to grasp, but it's really the traders who have grasped it, let's say, and learn how to think in what I call probabilities. Okay. They're the ones that don't experience the same kind of...
Well, no, I want to think in certainties because I did so much analysis. I back tested this moving average crossover system by the no-nonsense Forex guy. What could be easier?
The same kind of emotional trauma that the typical trader does because they're expecting something that just may not happen. So for an example, if this trade's a winner based on this particular trade I'm in right now, based on the exact same criteria that or let's say I'm in a trade right now, or I'm getting into a trade right now, and the exact same criteria exists in the market that did the last time, I'm going to naturally expect it to be a winner if it was a winner the last time. Or I probably will naturally expect it to be a loser if it was a loser maybe the last time, or we had 2 or 3 losers in a row.
And this could be a source of frustration for traders.
Oh, absolutely. In other words, and that's exactly what happens. It is a source of frustration, because if I'm expecting it to be a winner and it turns out to be a loser, I'm going to be frustrated. Not only going to be frustrated, I'm going to be disappointed, and I may even feel betrayed, depending on how much kind of energy that I put into the idea that the trade is going to be right.
Well, how do we get over that? I mean, how does a trader take, okay, so I've done all the things right. I've got my charts lined up. I've done everything I was supposed to do. How does the trader at least begin to accept these sorts of things, or how do they begin to remedy these issues?
Well, we kind of have to get into the nuts and bolts of this, of just exactly how the markets work, because I think that one of the big problems, one of the reasons why people have such a difficult time with this, is because their initial exposure to the markets themselves is through electronics.
Right.
In other words, through electronics, there's a real disconnect between what you're actually participating in and what's causing you to want to participate in the first place. In other words, markets started as exchanges, right. And there were, and so when you traded at an exchange, so you know that all prices are people-generated events.
Correct.
They are, and see, this is what people have to take into consideration. Everything happens because of what people believe. When you look at the nature of trading and break it down to its simplest components, what you have is everyone trying to do the same thing. There is no possible way that any of us can make money as traders unless we can buy low and sell high, or sell high and buy low.
Correct.
Is there any other way, Jared?
No.
No other way.
In every market.
In every market. So basically,
isn't that sad?
everyone's trying to do the same thing, are they not?
Yes.
Everyone is doing the same things. Now, the reason why we have price movement is because everyone has a different idea about what is high and what is low. Okay?
Right.
So now I get exposed to a technical method. Now, what does this technical method do? And this is the relationship that people need to grasp. If they grasp this relationship, then they can grasp this idea that you can take the same set of criteria and end up with random results. And it's this. It's like what people realized years ago is that you can take data points. In other words, data points meaning what you're doing is you're translating the human behavior, the human belief in if I'm going to buy
into something visual.
What's that? No, it doesn't have to be visual, but it's like it could be. Yeah, it started out being visual. It started out being chart patterns based on bar charts. But what you do is that if I'm going to buy, it's because right now, let's say the last price is 10, and I put in an order to buy something at 10, okay? It's because I believe that the market's going to go to 11, correct, or it's going to go to 12. Right. Certainly if I thought or I believed it was going to go to 9, I would wait, would I not?
Correct.
So the reason why I'm buying at 10 is because that's what I believe. In other words, all price movement is based on people's belief about what's going to happen in the future.
Now you said to me in a conversation we had yesterday, obviously we as individual traders are not large enough in our accounts to move the market.
Exactly. And
okay.
So this is the next connection that people have to make, is that since all price movement is based on people's conviction or belief about the future, how do prices actually move? For an example, when you put in an order or I put in an order, I don't trade at a level where I can actually move prices. But what the typical screen-based trader doesn't understand is that there are traders, there are thousands of traders out there who do move prices, and that it is their intention to move prices. Or you can have a large group of traders coming into the market and then cause prices to move. But what actually has to happen for prices to move is this, is that if the last price of something is 10, for the market to actually move to 11, all the offers have to be taken out, meaning that, or move to 12, all the offers at 11 have to be taken out. So in other words, people who are trying to sell at 11, they have to get their orders filled before it can get to 12. Okay. Well, for someone to actually bid it to 11 or bid it to 12, they are doing the exact opposite, and this is really critical. They are doing the exact opposite in that moment of what it takes to be successful. Okay. They're not buying low, they're buying high. They're buying high relative to the last price.
This is the absolute crux of it. What he just said is the absolute crux of what I'm saying. Listen to what he just said. They're doing the exact opposite they need to do.
and that it is their intention to move prices. Or you can have a large group of traders coming into the market and then cause prices to move. But what actually has to happen for prices to move is this, is that if the last price of something is 10, for the market to actually move to 11, all the offers have to be taken out.
Taken out. Stop hunt those puppies.
Meaning that, or move to 12, all the offers at 11 have to be taken out. So in other words, people who are trying to sell at 11, they have to get their orders filled before it can get to 12. Okay. Well, for someone to actually bid it to 11 or bid it to 12, they are doing the exact opposite, and this is really critical. They are doing the exact opposite in that moment of what it takes to be successful. Okay. They're not buying low, they're buying high. They're buying high relative to the last price. Or buying higher relative to the last
So how
price.
does understanding this concept, how does understanding what moves the markets help our traders to take it to the next level? Is this the first step for them getting control and understanding how the markets work and getting a grasp
they
of it?
definitely have to understand. They have to understand how prices move, because when they understand how prices move, then they'll understand how their technical method relates to this movement. Because what technical methods do, whether it's a visual pattern or moving averages or any wise trade or whatever, you're using mathematical formulas. Okay? You're taking data points. In other words, you're taking what people believe about the future, transforming them or transposing them into a data point as a price over time, okay? Or with volume. There's any number.
I'm just using my line chart as price over time.
Yeah, there's any number. That's what.
That's very simple, clean method. We got a trend line here. That's the 1 hour chart. Copy.
It ends up being as a fresh cross. But I'm talking about the actual mathematical formula that makes the fresh cross.
Okay.
So there are any number of variables that go into this equation. Now, what people have found is that, and this is here, what people have found is that using these data points into certain types of mathematical equations, you can find patterns in collective human behavior. And what these patterns mean is this, is that when this set of criteria, is present in the market, that there's simply a higher probability than not. In other words, there's a higher probability, or what I'm going to call an edge, a higher probability of one thing happening over another.
When the market goes sideways for an extended period of time, there's a high probability it will not continue to go sideways. When the volatility and the momentum dry up, like here, we're going to see movement out of that. Here, another seriously congested area trapped. What I believe does exist are auctions, people. They really exist. Below these wicks, we are trapped in a narrow range. The breakout traders are making money, and maybe they don't even know where they are structurally speaking. Okay? The guy that buys this plunge on limits may not even know what an auction is. He just knows that that is a high probability trade to sell up here in limits, to go a whole 40 pips underwater to make yourself almost 200 fucking pips. Are you kidding me?
That other people are actually going to come into the market and bid it higher from here or offer it lower from here. There's just, in other words, when the pattern is present, this collective pattern is present, it will repeat itself. But the problem is that
there's always a problem.
Repeats itself on a random basis because.
Oh, I don't like that random. Stop saying random.
Because even though the actual mathematical criteria is exactly correct or exactly the same,
you can't.
Your moving average is exactly the same length.
Mathematical models can't predict human beings.
That's right. Mathematical models can't predict who the actual individuals who are going to come into the market and actually do it.
Right, because it's an organic situation. We don't know who's stepping in, whether it's Soros, and this is why there's level 2 trading. I just realized that my level 2 trading is rubbish, has 13,000 views, and the last guy said he's laughing his ass off because him and his buddy are making money using it. Well, maybe they're making money because they're getting the fuck out, or they just have a silly-willy reason to get in the trade. We're probably, in a given day of price behavior, with a given X, right? Everybody should be making money, and they could be counter-trending you and making money because everybody's doing what they're supposed to be doing in those charts.
In other words, it takes someone to do it. When you put on a trade, if you're not going to make your trade a winner by bidding the market, if you bought something by bidding the market,
using all of my money,
using all your money if you bought something at 10, you could actually wipe out all the offers and bid it to 11 or bid it to 12 or bid it to 13. Now, if the price is at 13, all the trades that you put on at 10 are winners, right?
Yeah, but I still bought it at 11 and 12.
Yeah, but you're averaging up. But the point is, all the trades that you put on were winners. You actually made yourself a winner.
That's correct.
But what I'm saying is that when you don't trade at that level, we are actually obliged to other traders to come in.
When you're not George Soros and you can create your own market,
buy something at a worse
or Bill Gates or whatever
price than what we thought was low to make us winners.
So what you're saying is most of us out there,
and what you thought was low, so you're like, well, I thought that was a good price, but look at this price,
are dependent upon someone else
exactly
to move the market for us. We're trying to identify that pattern, obviously using the Wise Trade software to find those common entries. But again, it's a random event. But we're putting the edge, you said, in our favor.
Yeah. Jared, when you put on a trade, okay, when you put on a trade, do you know who, now what we've done, we've reduced the market down to these terms, okay, that it takes someone else to make us a winner, right?
Correct.
Okay, when you put on a trade, do you think about who that might be, who might come into the market to actually make you a winner?
No, of course not.
Yeah, no. And if it turns out to be a winning trade, do you know who those traders were or who that trader was that actually made you a winner?
No.
Is there any way to know?
No.
There might be, but it'd be pretty hard to find out, right? I mean, you could go to the clearing firm, the firm that clears the
bottom line is
bottom line. Yeah, exactly. So what I'm saying is that when the pattern presents itself, like, okay, I have an edge here. When the pattern presents itself, we don't have any idea of who is actually going to come into the market to do this for us. And so there's no point in analyzing. There's no point in judging. There's no point in trying to figure out.
But that's all humans do. I mean, that's all the typical person does is analyze and judge
whether it's going to work or not.
That's why trading's so difficult, because you're always trying to say, oh, geez.
Like, for an example, if I said to you, Jared, I'm going to give you a coin, and this coin is weighted in a way where it's going to come up heads 70% of the time. Right. Now, just because I know,
you could still fuck that up.
I know mathematically and statistically that this pattern of coming up heads 70% of the time exists. Is there still any way for me to know the actual sequence to heads to tails?
Of course not. It's an infinite.
Well, no, I'm saying, do I know the sequence? In other words, I'm going to flip the coin 100 times, and statistically it's going to come up heads 70% of the times. I still don't know which
times
flips are going to
come up heads.
Which flips are going to come up heads. They say which flips. It's not the times. Right. Which ones? In other words, we flip the coin once, it comes up heads. Flip the coin twice, it comes up heads. The next one's tails. The next one's tails. The next one's tails. In other words, we could have streaks of heads or tails. Okay, we could have streaks in there. The point that I'm making is that there is no way to know the actual sequence.
But at the end of the day, we know we have.
So even when people talk about risk-reward ratios, it's the implementation of that trade plan with that ratio. We don't know which one of those plans will be triggered, which ones will play out. We also don't know that. If we have a fixed ratio, we don't know. There's so much you have to be willing not to know. Right, look at this thing's breaking out. And it's not breaking. It's breaking out the bids, but they ask, if you're buying on a stop here, you just got filled. Whereas if you bought at structure here where the top became a bottom on the 30-minute or the 1 hour, there is no trade. But on the 30-minute, there's a structured trade there. We also have a top become a bottom here as we drift up out of this plunge that this guy bought into, and we don't even know how big or how wide a stop. Apparently tight stops buying into a giant vacuum is pretty much asking to be stopped out, obviously.
70%. So what that does, that obligates us, if we want to be able to trade our methodology in an effective fashion, to be able to utilize this methodology in a way where we can extract the maximum amount of profit that it makes available to us based on the pattern that it identifies. We have to do it in certain ways. In other words, our mind has to be free to be able to execute these trades without making trading errors. And the trading errors come from believing that because the pattern is present, that it's going to give me a winning trade on this one. This trade is going to be a winner.
And that's where the betrayal, and that's where that doesn't work. I'm never going to do that trade again.
You can't think that way.
No, you can't think that way.
You can't think that
That's
way.
the way the typical trader thinks.
Right.
The typical trader thinks, I'm not going to put this trade on unless I think it's going to be a winner.
Nobody would put a trade on unless they thought he was going to win. You have even more conviction because you back tested it and you have a positive expectation. All this bullshit that you hear people talk about. I've got a positive expectation. These buzzwords, these fucking talking points. I just want to throw fucking up every time I hear some of these fucking idiots talk about this shit. And there are so many people teaching Forex now on the internet. They don't have a fucking clue about it. This Wayne McDonald from Trader's Way is completely got his head buried up his ass, but it doesn't matter. He's a fucking salesman for the brokerage firm. He's so phony. Listen to what he says about, oh, it's so great since I got this job. I don't have to go to water cooler and listen to bad jokes. Dude, you're spokesman for Trader's Way. Come on, sign up here, beginner traders. Look at this goober system, a 21 and a 55 moving average crossover. He doesn't even say if it's simple or weighted. Well, you got to get the code for that.
Or why would I do it? And it skews our expectations. See, it messes our expectations.
Let's back up a couple seconds here.
Why would you trade if you didn't think it was going to be a winner?
There's some great stuff here, Mark, and I hope our traders are getting all of this. You're basically saying, and this makes a whole lot of sense to me, and I hope it's getting through to you guys, we have
I doubt it.
a tool that gives us an edge. Whatever it is. Right. Even if that edge is 2% or 3%, I don't know if we can...
No, it's more than that.
Maybe more than that.
What do you mean more than that? It's a lot more than that. It's far more than 50%.
Well, I was saying greater than 50. Okay. I was using edge is defined as...
I see. Okay.
So maybe 55 or 56% of the time. Right. Let's just say...
And the thing is, it doesn't even have to be 50% to actually make consistent money. That's what people can realize, too.
Here's another disturbing fact of real life.
That depending on what the ratio is between what you have to risk to find out if a trade is going to work and how much profit it generates when it does, you don't even need a 50% win-loss ratio. Right. As a matter of fact, back in the 80s, there are, one of the most famous traders from the 80s, Richard Dennis, on a percentage basis, 95% of his trades were losers. 95%. But the 5% that were winners were monsters.
I think that was the turtle trader.
And he was able to put on trades at a 95% loss ratio and make
95% loss ratio, people. This is real shit.
At the most, at one point, I think around 1987 or 1988, he had $400 million.
$400 million with a 90. People think that's bullshit. Well, you just don't understand. You know what? Just don't trade, please. Step away from the fucking trading platforms.
That using his edge or his money management, or a combination of both? A combination
of all of it.
Okay.
And see, one of the things he did too, and this is something I ought to really qualify with, he would use orders to actually probe the market. See,
So that's what my limit orders are. If I probe, I think that's what, to me, the probe is. You put an order down here. Let's see what happens. I'm kind of into this. This guy that's asked me about how do you buy into these plunges, it should be obvious at this point as we retrace.
One of the things I don't want to leave what we're doing right now, but I'm going to just kind of divert just for a moment,
okay.
And so that people understand that one of the first things to be a successful trader that you have to learn, other than the fact of finding a good edge, meaning something that puts a pattern, a collective pattern that your...
I think we found that.
That your edge identifies, that puts the odds in your favor.
I found it.
That there's a higher probability of one thing happening over another once this pattern is present in the market, is that you have to learn how to think in probabilities. In other words, you have to get your expectations, aligned with the way the market actually exists.
And actually think about, what if they just kept going down? People say, well, how do you buy into that? What do you do when it just keeps on putting you underwater? Okay, I expect to go underwater now. I expect to take this punishment. I expect to buy this plunge. And I could probably get stopped out of my scalps. I don't get the dead cat bounce I want. Right? If I don't get this dead cat bounce here, that gives me this beautiful topic on the bottom. I buy these new lows, and I don't cash out of something here. But look how the ATR, the true range, drops down to nothing here. As we crawl out of the abyss, this bottom's supposed to get a top. Just go trade the euro dollar. Step away from the guppy. It's a piece of shit. There's not enough liquidity to see these structures. They're so clean, and the spread is fucking under 1 pip. Why are you trading the guppy with a tight stop in the first place? Oh my God. It's like driving a semi-truck and not leaving a tandem semi-truck in a windy road without leaving enough room in the lane next to you. You're clipping cars. Gee, I can't understand why.
Right. And when you do, in other words, when you learn these kind of mental skills and you're able to execute your trades without fear and without hesitation, without analyzing, or even without thinking for that matter, because you don't need to think.
See, no, this is what people just can't take. Oh wait, I gotta think about this. Let me think about that. Oh my God, just put the fucking trade on. Jesus Christ, I can't take it.